Hello, everyone. Bruce Klein here at Bruce Klein Mortgage. Oz Lending coming at you today with this really exciting, cool tool that I want to show you, and especially this week as what's on the news. That's right. The Fed announced they've had another rate increase of 0.75%. I want to show you what that means for you if you're on the fence about buying a home, how that works for you. So stay tuned for this video. I think you're going to like it, and it's a really useful tool that I know you're going to be able to learn a lot from. So stay tuned. All right, everybody, I'm excited to show you this. Listen, this is a great tool that I have. I partnered up with Mortgage Coach so I can create all these cool scenarios for you, show you different loan programs, what it's going to cost you, what it looks like over the years, everything. I mean, all sorts of great things coming out of this Mortgage Coach program. And I'm excited to share this one with you, especially today, because what happened this week? The Fed raised the rates again, right? They raised it 0.75%. Once again, what does that mean? Okay, what does it mean for you as a home buyer? Well, every time the rate's a little bit higher, it means your payment's going up a little bit higher, right? Rates have gone up. But I want to tell you something. I remember when rates were 18% and higher. I'm old enough to remember that. And that is old. But you need to watch this so I can show you how homeownership can impact your life in a great way for you and your family and generational wealth. So let's dive in. I want to show you this first column here, right? This is a rent versus own scenario. So let's just imagine that right here, you've got rent at 2,200 a month. I've got it at 22.25. I'm factoring in maybe $25 a month for renter's insurance. And listen, this doesn't even include the fact that what if you have you're renting a garage, covered parking? What if you have pets and you're paying monthly monthly payment for the privilege of having a pet in your home? It all adds up, right? Well, when you own a home, you don't have those payments. Now you do have taxes, property taxes, and you have homeowners insurance, which is a little more expensive than renter's insurance. So let me just show you this though. Let's imagine what I've done is I've got this average about a two-bedroom apartment, DFW, anywhere from 17 to 2,400 probably on the average. So I'm just kind of put this in the middle here at 2,200 just for the illustration here. Let's look at this $2,200. Of course, let's go over and look at what happens if you do an FHA purchase. Let's say the purchase price is $350,000. FHA loan, the down payment requirement is 3.5%, unless you're using one of our down payment assisted loan programs, right? Those are great programs. We will always look to see if you qualify for that program. A lot of people are qualifying for them. It comes with a fixed rate. Great program. So we can talk about that, but not in this illustration. So 3.5% down for FHA. Let's say, for the sake of this, that our rate is 6.5%. All right, what does that do? That puts your payment, total payment, at 31.18. Now that includes estimated property taxes and estimated homeowners insurance. It's all included. So gulp, right? That's $900 more. Now I want to show you though what is happening. What's happening to your rent? What's happened in the last 2 years? What do you think is going to happen over the next 5 years? This number is just going to keep going up, $200, $300, $400 a year, and it's going to become unaffordable. At least over here, you know how much your payment is. It's not going up next year. The only way it can go up is if your homeowner's insurance goes up, and you can shop for that to keep it low, or your property taxes go up. That's the only way. And you can pay the difference and keep your payment because it's at a fixed rate. Keep your payment the same where it won't go up. Over here on conventional, the really only difference here right now is if you're a first-time home buyer, if you haven't owned a home in the past 3 years, you can put 3% down. That's the lowest amount you can put down unless you're doing a VA or USDA loan or one of our down payment assisted loan programs. So 3% down, 10,500. That can come from your savings, 401k. It can come as a gift from family. So there's lots of options there. Still 6.5%. The payment, $3,185. So both of these are $3,100 to $3,200. Of course, more than this. But I'm going to show you why we need to look a little bit past that, right? Because remember, that's going to keep going up. This is not. This is your cash to close. All right. That includes your down payment, your title fees, et cetera, the loan cost itself, somewhere in this neighborhood. This gives you an idea. Now, let's go talk about the real reason I want to show you this. Okay. Rates went up. The sky is falling. All you see on the news is, oh, the Fed's raising the rate, economy, you know, all right, that's fine. What does it mean to you, a home buyer? This is what it means. Let me just show you this. So let me blow this up for you. This is over a 5-year period. What will you pay in rent over the next 5 years? Look at this, almost $150,000. Yikes. Now, look down here. How much equity did you gain? Big fat zero. Goose egg. Who got it? Your landlord. Thank you very much. I'm your landlord. Thank you for buying my new car. I appreciate that. Now let's go over here. Look at this though. Look at your total equity over 5 years. You sell that home, whatever the value is versus what you pay, that's what you're getting out of it. You also can tap into that with a home equity loan, a cash out refinance. So look at this in just 5 years. You've got over $100,000 on either program here. And let me tell you, I've been conservative. I've estimated your rent to go up only 5% per year. Well, we know it's been going up a lot more than that and probably will continue to go up more than that. All right. And I've had the home values go up at only 4%. Well, they've also been going up more than that. For the sake of this, I'm just being conservative. So let's say worst case scenario, 4% is the average. You'll in 5 years, your equity is over 100,000 versus zero in rent. That just turns my stomach. So let me show you something else here. This is important. This is about you, your family, your future, okay, and building generational wealth. This is how it's done. Check this one out. 15 years. What's your total rent payment at 15 years? Almost $575,000. With your equity, what you've earned in 15 years, zero, nothing. All right, not good. Both of these on my conservative estimate here of only 4% per year over 15 years, you've got over 380,000 in equity in your equity bank that belongs to you. So, okay, $900 more a month right now, and depending on your loan amount, let's say it's anywhere from $700 to $1,500 more a month. Figure out how you can do that. What debts can you get rid of? How can you consolidate? Do you maybe get a roommate? Something to help pay this, right? Because what you're doing now is not working. Rent's going to keep going up. All right. Get a fixed payment, even if it's at 7%, 7.5%. It doesn't matter. It's because what's happening over, I've just shown you over 5 years, over 15 years, how it can change your life. I want to show you these examples. I've got several that I can show you, different scenarios, down payment assistance, if it's a VA loan, USDA, all types of loan programs. And listen, my realtor friends, I want to prepare these tools for you and your borrower. I want to sit down and go over this with you and illustrate for you how by not using something like this, you really could be missing out. Okay. You need to be showing this to your home buyers. It really makes a difference. So I'm excited about this. I know there's a lot in the news scaring everybody with the rates going up. But listen, I want to share this news with you because it makes a difference. I'm passionate about it because I know how much it can change your life. And I've just illustrated that. So listen, you can reach out to me, Bruce Klein Mortgage. I'm an Oz Lending. You can find me anywhere online. Just Google me, find me, call me, reach out. If you want to go grab coffee, grab lunch, I'm happy to do that. Let's do it. All right. Thanks for taking the time to watch this. Hope you found it to be valuable. If you did, please share it with someone who you know will appreciate it and will get something out of it. Okay. Thank you so much. We'll see you next time.